Sure. I mean, anytime we have new information on a company like this, we're going to try to look at it with, take a fresh look at it. And from what we've been able to gather so far today, some pretty interesting, innovative announcements. I mean, with Snap, it all really comes down to that large young user base that they have, figuring out how to keep those people aged 12 to 34 engaged on the platform and look for ways to monetize them. And some interesting things today. We just have to dig a little bit more deeply into them and see how it'll impact them financially.
Is there any sort of Facebook-like danger in allowing third-party apps access to your platform?
Sure. I mean, I think it'd be hard to say no to that. I think Facebook and the growth that we saw in Facebook and Twitter and Snap, et cetera, from a user perspective and from a financial perspective, that really ran ahead of sort of effective control of those platforms was something that I think is very much on these companies' minds as they do develop new products now. In other words, developing them from a point of having more focus on some security and content management. The question is, how that impacts their growth, whether they can effectively do that. And I think those are unanswered questions for these types of products.
All right, let's get to your Facebook upgrade. By the way, we failed to mention the price target moved to $200 from $175, Michael. It seems like you think not only are user trends staying solid, but also it seems like investors may be climbing a wall of worry when it comes to concerns about the spending that they'll have to do when it comes to security and privacy and monitoring news feeds, et cetera. What would the catalyst be at this point, though?
Yeah, so I think a couple of catalysts are the upcoming earnings report and then their developer conference at the end of April. And I think you're right, to put a bit more specific point on it, I'd say there's three reasons we're more constructive, right? I think investors are comfortable, increasingly comfortable with the headline and the regulatory risks, as you mentioned. I think that consumers and advertisers, through our checks, continue to use the platform at a growing rate. So one of our concerns when we were neutral on the stock was that the headline risk was really going to ultimately result in either or both consumers and advertisers moving away from the platform, and we're just not seeing it. They're innovating. Consumers are engaging more, particularly with Instagram, and you're seeing advertiser engagement with things like stories as well as the core business. And then really at this point, the consensus outlook for this company is for significant growth in these operating expenses. And while a big portion of that investment is going to be in platform health and security, there are also very big investments being put into new products that are, I think, have high revenue potential, and that's really not reflected in the consensus estimates at this point.